Just a few words in Portuguese, if I may. Muito obrigado pelo convite. Boa noite a todos.
Claro.
É prazer, uma honra, uma alegria estar aqui. Good evening to the previous speakers. It's a pleasure to be here. I enjoyed your presentation. Thank you very much. So CBDCs are coming, and central banks are undertaking extensive work on CBDCs. Sometimes it's just conceptual work, as in the case of Brazil, there's a discussion group, but increasingly it's practical development, and a few of the examples have been mentioned here previously. There's a striking result from a recent survey from the BIS, the Bank of International Settlements, that says that 10% of central banks worldwide say they're likely to issue a CBDC in the next few years. So that's 1 in every 10 central banks. And that is a major result. Now, what I want to do here is to explore what is driving the adoption of CBDCs worldwide by some, but also the lack of adoption by others. So let me start with some of the less consequential attempts of cryptocurrencies issued by central banks. We can call them quasi-central bank digital currencies, quasi-CBDCs. Let me start with the one that's probably the least consequential of all, the issuance of what's called the Libcoin by the Central Bank of Lithuania. As you know, Lithuania uses the euro. And so one wonders what kind of cryptocurrency is the Central Bank of Lithuania issuing, given that it is not empowered, it doesn't have the authority to issue euros. So if you purchase this Libcoin, what you receive is a digital token that can be exchanged for what they call a physical collector coin, and you can transfer it to other cryptocurrency wallets. But let's not get carried away here. This is representative of euros that the Central Bank of Lithuania cannot create. And so for all practical purposes, this is a cryptocurrency, not a central bank digital currency. Let's look now at a more consequential, a more telling initiative with crypto worldwide, that of Ecuador. So Ecuador, for the past 20 years, has had a dollarized economy. In Ecuador, you know, you go to the bakery, you go to the market next door, you pay in dollars. It's a dollarized economy. Ecuador no longer has its own fiat. But a few years ago, I believe in 2014, the Central Bank of Ecuador issued what they call Dinero Electrónicos, or electronic money. So basically the idea is you give the central bank your dollars and they issue an electronic token that is representative of a dollar. So in the end, it works just like Libcoin. Because it is not the token, the digital token is not a liability of the issuing central bank, since the Bank of Ecuador cannot print dollars. And nobody wanted it because there was not sufficient confidence in the Bank of Ecuador that they would not start operating like a fractional reserve bank, right? So they would not, there was a fear that they would start issuing too many Dineros Electrónicos that weren't backed by a one-on-one basis by real fiat dollars. So nobody wanted it. Ecuador dropped it. There's another similar story in South America, which is telling, of course, of how creative the central banks in the region can be, and how unsuccessful they are when they get too creative. The similar story is in Venezuela. Venezuela issued another, let's call it a quasi central bank digital currency. They call it the Petro. It was a mess. I was researching on it yesterday on Wikipedia. Seems that they were issuing one version of the white paper summarizing the initiative after the other, and it was a huge mess. It started in the beginning, you could buy petros with dollars, then you had to use rubles from Russia. The idea was that you were going to have a cryptocurrency issued by the central bank that was backed by oil reserves. How exactly you access the oil reserves, I don't understand. And in fact, nobody seems to have understood it, which is why nobody wanted it. And so the Petro has not worked. Now, these initiatives, that the failed initiative by Venezuela and Ecuador, and the successful but not very consequential initiative of the Bank of Lithuania, they tell us something about what a central bank digital currency is. It gets to the topic of definitions, legal definitions, really, which is, maybe at least 50% of what lawyers worry about, right? What are we talking about? And so why are the cryptos issued by Venezuela and Ecuador and Lithuania not central bank digital currencies? And the reason is because they are not liabilities of the issuing central banks in the national fiat. There is a central bank officer named, a Brazilian central bank officer named Marcelo Prates, who is probably I would say the person in Brazil that understands best central bank digital currencies from a legal perspective, and more as a matter of fact. And he has a short article summarizing that. I want to encourage everybody to look into that. His name is Marcelo Prates. Anyway, what we call a central bank digital currency proper is not any kind of cryptocurrency that has some money mass, but rather a cryptocurrency that is a substitute for cash. So CBDCs are variants of central bank money. They differ from physical cash, and banknotes, right? Or central bank reserves, which are in fact for all practical matters, right? Or for all practical purposes, bank reserves are central bank digital currencies. They are wholesale central bank digital currencies, but they are not available to the public. So where do we find real central bank digital currencies if we can't find them in Ecuador, in Venezuela, in Lithuania, and perhaps elsewhere? Where do we find them? We find them in the Bahamas. The Bahamas has issued the first real central bank digital currency. It's called the sand dollar. What is the sand dollar? Basically, each person has to download an app, what we call an e-wallet, to store and transfer the sand dollars. And the sand dollars are legal tender, meaning that the owner of a shop cannot refuse to be paid in sand dollars, right? He can refuse to be paid, reject payment, therefore, in any kind of crypto, but he can't say, I don't accept sand dollars. So it's M0, like any other cash, right? M0 in terms of what kind of a monetary aggregate it is. Individuals, therefore, they have their cell phones, okay? And they will have in their cell phones two different apps for currency. One app is the app from the bank, the regular bank, where they have deposits. So what is more technically referred to as private money, right? So it's private money in the sense that it is the official unit of account of the country, right? The Bahamian dollar in the case of the Bahamas, or the reais in the case of Brazil, or dollars in the case of the US, or euros in the case of countries in Europe, and so on and so forth, right? But they also have in their cell phone another kind of cash, a cash substitute, but that is also legal tender, and that's the cent dollar. And the parity is 1-to-1, and you can freely swap. So move money from your bank account into your e-wallet to get cent dollars, and vice versa, within a certain limit. I think I understand quite in a little bit of detail, at least the first and only central bank digital currency that exists as we speak, and we can talk more about it in Q&A if you wish. Now, there's something very interesting about the Bahamas, but also something very puzzling. What's interesting is the stated goal. The stated goal is monetary inclusion. So the cent dollar was created with a view, the white paper says, the white paper written by the Central Bank of the Bahamas says to give greater financial inclusion, right? So you live in one of the 700 islands in the Bahamas, maybe a small one, and it's difficult to get cash. It's costly to move cash over there. Maybe the banks don't want to open an ATM over there. Fine. You know, all of a sudden you're included in the financial system. You have cent dollars on your cell phone. So that sounds nice. But here's what is very puzzling for me. Here's what is very puzzling for me. Financial inclusion is not, as we speak, right now, in December of 2020, financial inclusion is not a good enough reason for a central bank to issue a central bank digital currency. Let me repeat what I'm saying. Let me repeat, because I think this is important. Financial inclusion is not, as we speak right now in December of 2020, a good enough reason for a central bank to issue a central bank digital currency. Why? Because you can promote financial inclusion with much cheaper technological options. Just look at the M-Pesa, for example, that is used in Kenya and many other alternatives, right? The Pix in Brazil, automatic payment system that is used with the help of a central bank account that centralizes all the accounts made available to the public by the distributor entities. It could be M-Pesa or Alipay or WeChat as in China, or the Pix system that you have in Brazil. They are cheaper and they achieve the same thing. Okay, the central bank digital currency is a huge bazooka. It's really expensive. It's really complicated. If your goal is financial inclusion, you don't need it. There are cheaper options. And so I don't understand why the Bahamas is doing it. And I have a hypo. I can't prove it. You can call it conspiratory theory, but I think that the Bahamas is developing a pilot for some kind of private business somewhere that wants to make sure it works out in the Bahamas and then can offer the solution to other countries. That's what I must assume is happening in the Bahamas. Nobody told me that. I have no insider information, but that is what makes sense. Okay, so that's the case in the Bahamas. It's an interesting story. The story that's out there for the public doesn't tell everything we need to know to kind of understand what's going on. Then there's China. So China, we hear, is about to launch its CBDC. There is actually a pilot project out there. It has already distributed a few CBDCs. Some people have it in their cell phones. We read it in the internet. There isn't enough information about it for us to understand exactly what's going on. But if you research about it, you learn that the aim of the Chinese central bank digital currency is to replace all money, not just so the idea would be in China to be the first cash-free country, which is a radical idea, right? It's basically the end of cash. Now, besides that, of course, just like in the Bahamas, they want to do away with what's called fractional banks, basically monetary creation by banks. So, I mean, I can't get into the details here, maybe in Q&A, but the basic idea is the money that we use here in the US, in Brazil, in most places, the money is not created by the central banks. The money is created by the banks when they make loans. And so the Bahamas has eliminated fractional banks, and China wants to do the same thing. And many details are unknown, but we can think about their purpose, right? Why are the Chinese doing that? Now, the first thing is, it's not about financial inclusion, okay? It can't be, right? It can't be, because it is already a highly digitized economy, right? Alipay, WeChat have over 600 million users. And so, of course, you know, there are the usual arguments made in support of the adoption of CBDC to reduce the handling of costs of physical money, right? So transporting physical money is expensive. Brazilians will relate to that quite obviously if they think about the robberies that have been happening in the country. In the city of Criciúma, for example, recently, just this awful, massive operation by robbers to steal a huge amount of money. If all the money is digital, then you don't have to spend all this money in safeguarding physical cash, right? And then there is, you know, all these boosting transactional efficiency, increasing financial inclusion. There's all of that, but that's not the Chinese story. Okay, that's maybe the Bahamian story. They say it is. I don't really believe it. Who knows, right? But the Chinese story, there's more to it. And so what's going on in China? So in part, it could be a reaction to the coming about of Libra and similar initiatives, right? So it's just basically the central bank making sure that it is not, how do I put it, that it is not excluded from the game of money. And it's easy for us to understand how that could be the case, right? If we're all paying each other with cryptocurrencies that we use through Facebook. So now when the central bank issues new money, new dollars, new euros, whatever, we just don't care because we're transacting in Libra anyway, right? So it's, you know, so far at least we understand that monetary sovereignty is kind of the integral part of being a state, with exceptions, of course, of dollarized countries, right? I just spoke about Ecuador, which is a good example. Then there has to be some merit to the argument that China is creating its currency to enhance monetary policy. So, for example, just think about what happened here recently in the United States. We received a check signed by the Treasury with money. The government sent money to people. It's called helicopter money, right? It's just money that they print and they send out to people and they say, spend it, right? And it should be easier to do that if people have central bank digital currencies, because the government does not have to mail checks to people in the case of the United States, which at this point sounds a little medieval, right? Or do it as the Chinese can do right now through WePay and Alipay and WeChat, right? Tencent's and Alibaba's gadgets, right? So it has to be that it's easier to do that through CBDCs. And more importantly, if it should happen that governments want to impose real nominal interest rates, I can give more details later on Q&A about that. But if the government wants to kind of tax your deposits, basically telling you if you don't spend it, we'll just take a cut out of it, it's easier to do that with CBDCs. And then there is, the very Chinese concern with surveillance. In the US, everything is justified in terms of preventing terrorism financing, which, by the way, is a real concern. I don't want to minimize the importance of controlling currency to avoid terrorism financing. But terrorism financing is sometimes used just as an excuse for the government to do whatever the hell they want. Everybody knows that. So in China, terrorism is not that big of a story. At the same time, surveillance is. They don't talk about it so much, but everybody knows it's a total state, a totalitarian state, and the white paper issued by the Chinese central bank, People's Bank of China, to explain their initiative with CBDCs. It's written in Chinese, and it looks like it talks about controlled anonymity, which already exists to some degree, I must assume, with WeChat and Alipay, but I can also we can all just assume it's going to be a bigger deal and easier to manage if they have, just direct access to people's spending. And there's, of course, in the case of China, this strategic element, right? They've been talking about attempts to internationalize the renminbi. In other words, try to have other countries settle their foreign trade in Chinese currency rather than dollars. And it hasn't never taken off for a bunch of reasons, including because when they lift their own foreign exchange controls, what happens is there's a lot of money flowing out of China because wealthy Chinese just take advantage of the opportunity to ship their money abroad, buy an apartment in New York, buy a beach home in Portugal, and so forth. And so there is a long-term plan for China to internationalize their currency, and it hasn't been really successful thus far. May or may not happen, who knows, okay? Now let's talk about the US very briefly. The conversation about CBDC in the US starts out with this idea that they need to compete with Libra because Facebook's stable coins, right, Libra, is it doesn't want to displace other cryptos. It wants to displace national fiat, right, government money. And so the coming about of not the coming about of Libra because it doesn't exist, but the Libra proposal was really a wake-up call for the Fed, the U.S. central bank, because it's a direct challenge to the dollar. Everybody knows that. And it's the same story that I was already explaining. If people transact in Libras, then the role of the dollar goes down. And the US is the country that has the most to lose if the national fiat goes down, precisely because, as as we stand now, the dollar is the international reserve. If you're an Indian company importing whatever from Brazil, you need to buy dollars, right? So everybody worldwide needs dollars for foreign trade. And so despite of all the, political problems that the US is facing, the role of the dollar has not been receding. It is increasing recently, right? And so the Fed needs to protect that. I think Helen, in the previous presentation made that very clear. And the other thing is, in the US, the pandemic seems to have played a role in the political elites thinking about central bank digital currency. And there's a lot here. I can't sort of talk about every detail, but a part of it is when the Congress passed a major stimulus bill that was enacted, I think, in April or May, or in the beginning of the year, authorizing the government to spend tons of money. And the original bill, the original proposal for what later became the CARES Act, which is this stimulus bill, there was a provision for the inclusion of what could become a central bank digital currency, since the Fed, as we speak, does not have a legal mandate to do that, right? There's no legal authority for the Fed, the Central Bank of the United States, to issue CBDCs. And I've written a paper called Central Bank Digital Currencies, The Hidden Agenda. It's available online. And it's a hidden agenda, maybe more hidden when I wrote and less hidden now. It's more obvious now. But there is a political agenda that is very strong in the United States that comes in tandem together with this idea of enacting or creating a CBDC, which we can use. There is this economic jargon, this term called financial repression. Financial repression, to make it simple, means that the government will control who gets loans. And so the idea is to transform, and in the United States, this is a huge idea. There's a lot of popular support for it. Whether it will become policy is a different story, but this idea of making the central bank some kind of development bank. Just to use an analogy with the Brazilian figures, it's almost like trying to make the Banco Central do Brasil the new BNDES, right? So the central bank prints money and just lends it to whoever it wants based on political goals, which the central bank in the US can't do, the central bank in Brazil can't do, most central banks cannot do, but they want to do that in the United States, many people at least. For example, this idea of the green projects, the green economy. So there's this idea of creating, of allowing the central bank to print money and lend to projects that are sustainable. Other people support similar initiative for what's called UBI, or a universal basic income, renda básica, we would say in Brazil, right? And even strategic sectors. So it's really joining the central bank and the development bank into just one thing. And now moving to Europe a little bit to continue my sort of survey about CBDC worldwide, you listen to Christine Lagarde, right? The former IMF president, the current European Central Bank president, and she is very open about it. She says, we want to create a CBDC because we want to support a green economy. And that's risky. Okay, I can't talk about it right now, maybe on Q&A, but it's risky. For many years, the tradition in monetary theory is to say central banks can't lend directly, they can't finance the government, because that carries all sorts of problems related to misallocation and generating inflation, and also political accountability. There's all sorts of problems with that, but the Europeans seem to want to do that. In my paper, the one I mentioned, I am against it. I think it's a terrible idea, but who knows? And finally, Brazil. Let me just conclude here with a few thoughts about Brazil. Brazil does not need a central bank digital currency right now, because the agenda of inclusion and competition has been taken care with what we call in Brazil PIX, right? Which is, the Brazilian version of Alipay, WeChat, that is done by the government because there wasn't enough political coordination. Who knows why? But we couldn't do it with private banks. We Brazilians. And so the agenda of competition, right? Competition, I mean the risk that the government is just outcompeted by private currencies, has been taken care by the government with the PIX. And the PIX is a good enough instrument for financial inclusion. And so the central bank, I must assume, understands that very well, the Brazilian central bank. And there's more from Brazil is completely different from the US and the European Union and Japan, because we have this risk of inflation in Brazil, which they don't have. So Japan and the US and Europe can print as much money as they want, and prices just magically don't go up. Nobody really knows why this is so, but that's what happens. They print money like there's no tomorrow, and prices don't go up. But that's not the case in Brazil, obviously. And of course, the Brazilian central bank understands that very well. I can talk about that later on. And so Brazil cannot play with issuing too much money, and it has to wait and see. And the game in town in Brazil right now is peace. So let me just conclude with a very, very brief thought here that I want to leave you with. The technology for CBDCs is available worldwide. Everybody can access it. It's not a big deal. Even a country like the Bahamas, right, a small economy that has actually been facing a lot of trouble because of tornadoes, and the Bahamas was able to do their CBDC. If the Bahamas can do it, any country can do it, right? We must assume, or almost any country. So the technology is there, but not everybody is keen on using it, at least not on the same speed, right? It could be that in the end, everybody's going to end up with a CBDC. But right now, the actual implementation of CBDCs depends on political arrangements and a bunch of other considerations of convenience, which are different from place to place. And I think this this kind of overview that I tried to deal here, or to develop here with you, where we spoke about Lithuania, Ecuador, and Venezuela, Bahamas, Brazil, European Union, the United States, and China. I hope it can be of some use. Thank you very much.